Snowflake went public in September with an already elevated reference price of $120 a share. The company opened for trading at $245 and at one point last year traded as high as $429. More recently, however, Snowflake shares have retreated during this widespread sell-off in growth stocks. Today, I'm going to talk about the just reported Q1 quarter for Snowflake. I'll run through some graphics on the core business, play a clip with the CEO, and from Jim Cramer on Mad Money, look at what other analysts are saying about the company, as well as share my own thoughts. Let's go. Here's an article rounding up the quarter for Snowflake. Snow reported better than expected results for the fiscal first year and raised full year guidance. The stock's reaction indicates that investors perhaps wanted a bigger beat and better guidance than delivered. Quick look at the stock though. It did open lower, but it has rallied higher from a big swing. It was initially down 8% on the earnings release and is now up significantly from that earlier point. So a good recovery. Snowflake posted revenue of $228.9 million, up 110% from a year ago, and ahead of the street consensus forecast at $213 million. Product revenue, the company's preferred performance measure, was $213.8 million, also up 110%. The company's remaining performance obligations, an indicator of future growth, was $1.4 billion, up 206%. Its net retention rate, which tracks renewals, was up 168%. Snowflake had an operating loss in the quarter of $35.8 million. The company's operating margin was negative 16%, smaller than the guidance target of negative 23%. For next quarter Q2, Snowflake projects product revenue of $235 million to $240 million, up between 88 and 92%. So continuing some really impressive growth, the strongest you'll find of pretty much any stock out there, with an operating margin of negative 19% again for next quarter. For the full year, the company now forecasts revenue ranging from $1.02 billion to $1.035 billion, up from a previous forecast of just $1 to $1.02 billion, with an operating margin of negative 17% compared with the previous guidance of negative 19%. So not a whole lot of change in guidance, but it is positive improvements being forecasted. Snowflake reported strong Q1 results with triple-digit growth in product revenue, reflecting strength in customer consumption. CEO Frank Slootman said, remaining performance obligations showed a robust increase year on year, indicating strength in sales across the board. Now let's head over to Hypercharts to visualize the quarterly performance. Now I did already read through some of the numbers, so we'll just be looking at the general trends. So again, substantial revenue growth, even just quarter over quarter, while the operating income actually only increased a marginal amount, showing some good leverage there in operating efficiency. Operating margins, as I was just talking about, increasing quarter over quarter, still struggling overall though, and an increase in operating expenses to be expected with a big quarterly increase in growth, but nevertheless something to be noted. But then again, we have growth that is pretty much moving sideways, which is very, very impressive. I cannot stress enough how impressive this is to have triple digit growth. That is insane. Now I would not expect this chart to go any higher, especially because of how high it has already been. The more they can add dots to the right of this graph without significantly decreasing the growth, the better it would bode for the company's long-term potential and ability to generate substantial revenue in the future. So here's CEO Frank Slootman on Mad Money last night to provide some color on the quarter.
Now, it is very clear with the number of huge seven-figure deals you did versus previous. It's almost as if someone flicked a switch and realized, you know what, we have no choice. We have to leave who we're using, and we have to go to Snowflake. And it happened this quarter.
Well, it's not all this quarter. It's not that simple. A lot of what you're seeing, it's sort of the tip of the iceberg, right? It's all queuing up over periods of time. Our sales cycles are long. It's just every quarter, you sort of get to see, what we're being able to harvest in that particular period. But, our business is going to conduct itself really over, considerable long periods of time. And it's sort of the message to investors is, to really understand, we're signing on here for a journey that is, 5 to 10 years. And it's not an overnight, throwing a quick switch and everything is great. These are big changes that we are experiencing in the marketplace. And we're just super happy to be in the middle of that and being an enabler of that.
Now let's talk about the analysts. What were their reactions? So analysts pretty much affirm their ratings on Snowflake, but are concerned about the stock's valuation. So here's another article that I think did a really good job summarizing everything that I will read through now. Here's what Wall Street analysts had to say about the company's quarter. Snowflake is executing quite well, and if you take management at their word, the business outperformed its internal booking targets in the fiscal first quarter. The only gripe we have with this stock is valuation, which at 43 times enterprise value, based on calendar 2022 estimates, makes it the most expensive in all of software. We get it. The exuberance is grounded in logic. We simply think that some of the excess needs to burn off before the risk reward is more in our favor. This likely comes as estimates catch up, but we'll certainly admit to being much closer to an upgrade here than we were 4 months ago. The next catalyst for Snow will be the firm's first ever Analyst Day on June 10th, which we expect will generate another round of favorable commentary. Here's another analyst identifying the large opportunity in cloud-based data management that will benefit Snowflake going forward, though the muted guidance raises questions about whether the company's growth is already priced in. And here's Barclays predicting that Snowflake shares will trade sideways for a while due to its high valuation. I'll get to that in just a moment. And Jefferies saying they're impressed by large customer growth and strong revenue performance obligation. While the company's fundamentals are strong, valuation is still the key pushback for the stock. And here's Rosenblatt saying, given the healthy IT spending environment so far this year, the accelerating digital transformation trends, and the strong first-year performance from the lending cloud service providers, we expect Snowflake to meet and possibly exceed our 93% year-over-year product revenue growth estimate. So what are my thoughts? Well, in spirit of full disclosure, I do not yet own any Snow stock, but I do think these worries about valuation actually make sense in the traditional sense. Snowflake carries a crazy multiple. If we take it back on over to Hypercharts, we will see it's trading at a trailing 12-month revenue multiple of 97 times, and investors get upset when Palantir's in the 20 to 30 range, so just think about that. A very expensive company, but you will not be finding growth like this from anyone else. And it's also worth considering that the stock has gotten cut in half in the last few months, so there's just only so far a company can fall before catching a bid, which is perhaps what we saw in the last few weeks. But that's not to say the multiple can't continue to compress going forward, as we've heard from some of these analysts. This is probably a stock that you don't want to mess with unless you're just buying and holding common stock, because there could be a rough period of time during which the business simply can't support the share price. Long term though, Snowflake has the brand, market, and expertise, I believe, to thrive. It's just that, as with other volatile stocks, you have to be ready for such volatility and protect against any damage it may cause. In conclusion, I don't see this stock going to or below its reference price of $120 per share, barring any catastrophes. Considering the strength and belief behind Snow, it's a very resilient stock, considering how many are invested in it. Personally, just looking at the stock chart now, I wouldn't want to pay any more than $200. It looks like it has good support above the $200 level, but we'll have to see where the stock moves as the market digests this report. I'm going to have to do much more research into Snowflake, but I'll leave it here for now. Drop a like if you found this roundup insightful, and please share your thoughts on the stock and the company below. Until next time.